Welcome everybody, this is Isan Penny here from the Academy of Financial Trading, one of the senior account managers here within the same, and we are about to begin your 7th lesson in part of your foundation trading program. I would particularly like to commend you all on your participation and engagement up to this point, welcome you all from the US, and tell you that I am delighted to be here presenting to you what I know you've all been very excited and waiting for, and that is the Beginners Trading Platform Support. So, before we go into any more detail, folks, let me at this point make sure that everybody can hear me okay. So at this point, if we can all type in Y for yes into your chat box, that I can then get a clear view, guys, of how the sound is actually coming through. So I can see Joshua, I can see Muhammad, I can see Agnolia, I can see Karen, I can see Janice, I can see Michael, I can see Raymond, I can see Frederick, I can see Caroline. Okay. Fantastic, guys. Lots of names there, but for the sake of this presentation, suffice to say that the majority of people in attendance can hear me as well. So, fantastic. This webinar is being recorded. As all of you know, all of our live webinars will be posted live in your video access section within 24 hours, guys, of each live webinar. Now, I'm going to deal with any questions you have during this presentation that come up during the presentation. If they tie into the overall flow of where we're going with, okay? In other words, guys, if you have a question that goes way back to lesson 2, okay, and is specific to that lesson and doesn't relate to the material we're looking at, I can't address that, okay? But what I will do is I will address any questions in more length or more detail then in the bonus Q&A session at the end of this session, okay? Furthermore, the email on screen, support@academyft.com, is where you can get in touch with your trader support manager or your market analyst who's looking after your current account, and you will be able to ask any follow-up questions that may or may not relate to this, guys, okay? So in other words, all questions we wish to cater for. However, during this presentation, we must remain focused and on track, and I'm sure you will appreciate that in the long term. Now, we're testing the distribution, so we're delivering this webinar fine from a bandwidth perspective on our end. What might be a problem on your end, guys, okay, is if you've other resources open on your machine, particularly resources that use a high amount of RAM or bandwidth. So in other words, guys, close everything down on your machine, stay focused, sit back, enjoy your coffee or your tea or whatever it is, and let's get on with this presentation. So, before we begin, let us all at this point embrace a quick risk warning. I'm not going to read it all out, guys, but familiarize yourself with this information. Appreciate what it says, okay? We're purposely being very candid about the risks involved with financial trading. And why is that? Because ultimately, it's our advantage as an organization because we trade in a way that reflects the reality of financial markets. We're not promising you skyrocket returns. We're promising you over time, which you'll hear a lot about in 8, 9, and 10 lessons, that is, or in lesson 8, 9, and 10. You'll hear a lot about our styles, and in particular how to gain access to those styles. And what we see, guys, as a result of those styles are reasonable returns, okay? In other words, returns that are not going to double your account in a month, guys, as that is completely unrealistic. If you're coming from the US, and I know almost all of you are, you're going to need to use a brokerage that is regulated within the US, okay? Now, the platform we're going to demonstrate in this webinar is kindly provided to us from a UK brokerage. You're not going to be able to trade real live funds as a US citizen with an online UK retail brokerage. And really, guys, again, from your point of view, we believe that's exceptionally positive because we want to remain as an educational provider, nor more nor less. We also want to remain impartial again, and that's really hitting home on that point furthermore. And we've purposely chosen this platform, guys, where you cannot open a real account and leave you to choose your own preferred broker using excellent trading software. What we will be looking at, though, is MetaTrader 4. Okay, guys, does anybody have any idea how MetaTrader 4 really relates to us as traders, or how MetaTrader 4 relates to a broker? Any ideas whatsoever? I think it's important to be clear on this. Any ideas, guys? Yeah. Okay, so a lot of people are saying MetaTrader 4 is software. Some people saying MetaTrader 4 is your charts. Some people saying MetaTrader 4 is a funny name. That it may be in certain dialects, of course. Ultimately, MetaTrader 4, okay, the way to think about this is it's software in the business-to-business space, okay, and MetaTrader is the vendor, or MetaQuote software is the vendor, okay. So they basically lease this software out to brokerages, okay, or whatever way the pricing model is done. They create the software for use by brokerages, okay, and through that software, the broker will then display their products, i.e. the markets and the type of derivative markets they're offering to their clients through that software, through MetaTrader. Okay, that's what MetaTrader is. So in choosing to show you MetaTrader, what we're doing is we're showing you one of the most popular used or frequently used and popular trading platforms in the world, hence giving you as much scope and range when it comes to actually choosing your own broker. Again, we want to be very, very clear about staying on that side of impartiality. Okay. We've lots to get through and we've very interesting things to talk about. So let's do that, guys. An overview of tonight's presentation is to set up your trading workstation, okay? Anybody here tell me, guys, what is a workstation? I know that might seem a bit simple almost, okay? But what's a workstation? What does it mean for us to have a workstation? And I would always draw a comparison here to, let's say, that of an architect. If we imagine an architect, guys, okay, he has a certain job to do. And of course, we all would associate that with drawing and being very particular and diligent about certain measurements and angles. But in order to do that, an architect needs a couple of set squares, a T-square, i.e. for measuring angles, for measuring distances. And he also needs a huge board, some paper, different shades of pencils, and a T-square then that can move up and down his board, allowing him or her to draw straight lines. It's only through that, okay, does the architect then get to perform his or her function proficiently. Well, it's the exact same with trading. You need certain things in order to trade. What you need is a trading platform, okay? A trading platform, which effectively, guys, yes, it will be MetaTrader, but what that basically is bridging the gap between you in your living room, in your kitchen, wherever it is, in your own personal workstation at home, okay, and the market. It's bridging that gap. So it's the way you will actually view and interpret the market feeds, the market prices, and hence then make predictions with hopefully accuracy as to future price movements. We'll have to review the most important features, which is needless to say, to be perfectly honest. That will take most of our time this evening. We're going to set up the platform itself, make some trades, show you how to understand what that looks like. We're going to put on some orders, show you guys how to practically use the indicators, okay? Now what we're not showing you there, think about that language, we're not showing you how to interpret and analyze markets using indicators. We're showing you how to practically use them and apply them to charts. We're remaining completely impartial and unopinionated as to any price movement here or in the future. Okay? When we've done all that, we're going to need to be very clear about the truths of practice trading or using demo accounts. And then we're going to talk about training and back testing. Now, within setting up your trading workstation, you guys need to have access to certain things, or let's put it this way, you should have access to certain things. One of those things is the Forex Factory calendar. Anybody here ever heard of this before, guys? It's quite popular, okay? It's quite popular. And I'm actually just going to bring up on screen Forex Factory. I'm just going to type it into my browser, guys, and see if you can see what I see. So, I've gone to forexfactory.com and I've clicked straight into the calendar. And what I'm seeing in the calendar, guys, is a list which is color-coded in terms of impact expected, okay, from important economic announcements or from official economic data being published to the general public. Why is that of interest to us? Well, Very simply, guys, certain pieces of economic data, and for you in the US, I think one thing you're going to be very familiar with is the non-farm payroll. Around that time of the month, or around that time when that's expected to come out, a lot of speculation on the market actually exists. The reason being is, okay, if that economic data is misaligned with expectations, we often see that the market quickly jumps back, or quickly jumps up, or quickly moves price, because the market sentiment then is saying basically that as a result of this economic data, the price for this particular asset class, if that is the dollar, is certainly not where it should be. Hence, a movement occurs based on the market holders, based on the people in that market. Okay, that's effectively what you can see here, and it's a good way to stay connected to the market and what's going on. Okay, that's what's important to understand about this. Furthermore, there's audio squawk, which I think very simply, guys, is a squawk. It's audio, it happens all the time, and it's like a narrative. It's kind of US based as well. Okay, so maybe that's appealing to you guys. And through that then you will be connected to the most recent and the most, I guess, important facts relating to capital markets. You also have Bloomberg TV, guys. For us, we probably consider that the Bible here in work. It's always on in the office. And Bloomberg TV, again, is a nice visual-based narrative as well, with lots of interesting analysts, lots of interesting people giving their 2 cents, if you will, on markets, what's happening, what may happen, what may not happen, why that is. Now, the most important piece of the puzzle, though, is getting MetaTrader 4. We are not going to show you, okay, a particular platform, or a particular portal, I should say, in internet terms, through which you can download this. You are going to have to do that yourself, guys, okay? All you need to do, and I'm going to be very, very, very basic and simple about this, all you need to do, guys, let me bring up Forex Factory again, is you need to Google MT4 broker, or MT4, even you can see, guys, it's coming up already, MT4 Brokers USA. Okay, MT4 Brokers UK. Again, though, remember, they have to be regulated in the United States. So, that being said and done, once you click on that, you can then locate certain brokers which have MT4, and you can download a free trading platform therein. When we look at that, guys, and when you have your trading workstation, it's useful to be able to set defaults, particularly for instruments, chart layouts, and trade sizes. And speaking of, let's make our way to our platform and let's do just that. So I'm going to give everybody a sec just to gather themselves quickly, guys, okay? Everybody see what's in front of us now. I'm just going to give you a sec because we've moved away from the slides and now we're going to be platform based, okay? So can everybody see this? Well, what are we looking at here, guys, okay? We're looking at 4 charts, okay? The first is Euro US dollar. The second is gold, just underneath. Then we're looking at sterling US dollar. And then we're also looking at crude oil. Now, in looking at these charts, guys, okay, there's no particular reason we need to have 4 charts displayed on screen at the one time. So what I'm going to do is, I'm going to close down gold. I'm going to close down crude oil. I'm going to close down sterling US dollar and leave open and maximize Euro US dollar. Now you can really have it any size you want, guys, but in order to help with a full overview, I'm going to maximize the same. Now, for one reason or another, this particular brokerage has given us a chart overlay already. So we can see there's 2 moving averages already applied to the platform, okay? And what I'm going to do, guys, is I'm going to remove both of those, and I also want to change the background around too. So the most important thing to remember is how to do that. All we do is we right click, we go down to properties, all the way down, and then we go to common, and we uncheck show grid in the bottom right hand square, and we uncheck show period separators, and then we OK that. And instantly, guys, it's a lot more easy to see. It's a nice smooth chart, just the candles, okay? Now let's right click again, and let's just go to indicators list. And let's just highlight one of the moving averages, delete the same, do the same with the other one, and then close. And now what we're left with, guys, is the raw price action, the raw daily candlestick chart for Euro US dollar. But there's a problem. Can anybody tell me what that problem is? There's a problem here, guys. Can anybody tell me? Any ideas, guys? What's the issue? Okay. This requires a little bit of lateral thinking. Well, spot on, Susan. You're on the money, okay? We're looking at the Euro US dollar between the 10th of September 2012 and the 5th of February 2013. Frankly put, guys, okay, that is of absolutely no interest to us at this point whatsoever. And in order to make any trading decisions, we need to know what's happening currently. So the question is, okay, do I have to left click and drag all the way up to the current date? Because that's going to take me a long time. If I have to do that with every chart, it's going to be particularly irritating. Well, let's just drag it back and let's say, is there an easier way? And yes, there is. I want to bring your attention, guys, up to the toolbar of MetaTrader 4, okay? And if we look at where my mouse is currently hovering, we see that there's these two buttons that are unpressed, but I'd like to impress. The first one is like a chart with a little green arrow. And the second thing is again like another XY axis with a red arrow. So I'm going to click one of them. And what that instantly does is ensure that as each new tick comes in, as each new price update comes in, we instantly see the same. In other words, we're always looking at the current price. We can also check the other red one, and what that will do is give us some nice distance, okay, between the very right part of the screen, or the right landscape, if you will, and the current price. In other words, we're not cluttered and right up to the top, guys. We have a bit of breathing space, so we can make kind of better predictions. Usually, if that's the case, it's more visually pleasing. We can zoom all the way out, guys, which is a very easy function to navigate. It's simply the magnifying glass with the plus and minus, and that allows us to get varying degrees, guys, of magnification, which inevitably do help with analysis, okay? Now, what I'm going to do, guys, right away is something that I'd like to show you all, and something that I want to bring into this equation right now. I'm going to go to trading, I'm going to go to new order, okay, and I'm going to go buy by market. Now, what I've just done is purchased one lot of Euro US dollar, which is 100,000 US dollars in terms of euro, in terms of how much that would acquire 1 euro, okay, and through that, okay, we now have placed an order. So there's an order now live in the market. But there exists another problem, okay? How do we know how much that order is currently winning or losing? So we need to then find our way around the terminal part of the platform, okay? And this is the terminal here, guys. Basically, the terminal happens under the chart. If you look at the sub-tabs down here, guys, we're currently on mailbox, okay? Which basically is of no interest to us right now. We want to go to trade, which is where it's all happening. And we see now that we are currently losing minus 21 to 23 US dollars as a result of placing that order. What's important for you guys to understand is it's here that you'll understand what your floating profit levels are. Are the orders going in favor? Are they going against you? That all happens from the terminal where you can see the same. You have some nice information, guys, also about the time that the order was placed, the size, which is the lot size, the price, the stop loss, take profit, etc., etc. What I want to understand here, guys, is one thing, okay, from your perspective. Does everybody understand at this time the concept of lot size? Just have a think, guys, for a couple of seconds there. Are you 100% clear on the definition of lot size? Could you recite it, guys, to your grandmother? That clear? Can you put it that simply? Okay, we're kind of, from what I can see, and there's still answers coming in, looks like about a 50-50, guys. So I'm going to go through and explain this. I'm just going to download, oh, and I haven't got it, unfortunately. I'm going to bring up, guys, my notepad, okay, and I just want to sketch this for you. When it comes to lot sizes, guys, okay, what we're looking at effectively is price or units in terms of a standard contract size. Let me put that a lot more simply. Let's say I'm a particular gentleman and I enjoy buying cans of cola, okay? And the particular grocer I go to only sends cans of cola in packets of 10. So each time I want to buy one can of Coke, that's not possible. I have to buy 10. Now, let's say this grocer starts doing business another way, okay? And he allows his customers to start buying one or two cans of Coke. In other words, guys, integer multiples of 1, okay? Not just integer multiples of 10. Well, let's say then we have got the desire to buy one can of Coke. But our grocer is going to be a little bit more awkward. And he says to us, he says, look, customer, I'm a grumpy old man. What I want you to do now is phrase all your orders to me mathematically in terms of 10. And we say, that's fair enough. I know how to do that because I know what 1 is as a fraction of 10. It's 0.1. It's 1/10. Or 1 over 10. Is that clear to everybody, guys? That's a very simple analogy, right? But what's happening here is, okay, the lot size is 10. That's the standard contract size. And the trade size, the notional trade size, is 1. So when we're looking at oil, with many brokers, the standard contract size is 1,000. Which is to say it's 1,000 barrels of oil. Now, if we want to buy 30 barrels of oil, or if we want to trade 30 barrels of oil, I should say, how do we phrase that, guys? Well, we have to find 30 divided by 1,000, 0.03. Does that make sense to everybody, guys? That's the contract size we're looking for. It's always a standard contract size, and your trade size revolves around that standard contract size. So when you're looking at the platform and you see size here, which is 1.00, what does that mean, guys? Well, what's the standard contract size in Forex? For Euro US dollar, what's the standard contract size? Okay, Michael, Peter, Tony, Wade, Aaron, spot on the money. Okay, it's 100,000. So anytime you're trading, you're buying or selling 100,000 US dollars. That's what you're doing. Okay, if you're buying US dollar, you're selling euro, and if you're selling US dollar, you're buying euro. That's the way it is with currency pairs, guys. So if you're going long here, you're buying US dollars and you're selling euros. Okay, and think about why that is. You're selling euros, so if the euro weakens, you make cash. If the dollar weakens, if the euro strengthens, you make cash. If the dollar weakens, you lose cash. Okay, based on that transaction. So you've got $100,000 here. Okay, what does that mean? It means, guys, literally, that's the monetary value of that trade you've placed. If you wanted to buy, or if you had in the size column here 0.5, well, that would mean 50,000. Everybody see what we're breaking down here and trying to get at, folks? We're trying to show you exactly what it means, or exactly what a contract size is, and why it's important to understand that. Okay, I think we're all clear on that now, guys. So, thank you for your participation there, folks, and well done. Now, another thing that might occur, and I'm just going to play around with this window here, guys, and make it a little bit bigger, okay? What this is the market watch list. Everybody know about that, guys. The market watch list. The way to think about this is, okay, it's the list of all markets that are available to you via that brokerage. The list of all products that are available to you via that brokerage. Now, let's say we're looking for a particular product and we know from our broker's website that he has this particular product, and that particular product might be the daily chart of, the current price, or the derivative product of, let's say, Google or Facebook. Do we really have to scroll down really slowly and read every single symbol? guys, that's very, very cumbersome and really not an enjoyable way to spend their time. So yes, there is a much simpler way. We simply left click once on any one of the instruments and type in then, let's say, FACE, which is the ticker symbol for Facebook. Just going to do that again. That's actually not coming up. Let's do it for another asset class. Let's look for Google, GOOG, and it brings us straight to Google. Okay, and we can then right click and open a chart window, and whoops, there's a bit of a problem there. It's not as nice as our Euro US dollar chart. Let's address that in a second. But what about Facebook, guys? Well, what we need to do and always need to do is right click on the market watch list on any asset class and then go to show all. And you can see the scroller actually jumped up a bit there, the macro scroller. So let's now search for Facebook, and voila, here we go. Let's right click on this again. Okay, anybody notice something, guys, we got Google and Facebook? There's a problem here. Well, maybe not a problem, but it's indistinct, or it's distinct from the overlay that we have on Euro US dollar. That overlay that we were favoring, that overlay that we believed was the nicest way to view the chart. Well, what we need to do is we need to right click on Euro US dollar on this template and save this template then as default and overwrite the default template. Now let's close down, right click and close Google and Facebook. Okay, let's go back to Facebook, open it again. And now we've got something which is a lot more pleasing. Let's go back up to Google. Let's do the same. And lo and behold, it is indeed then similar. And of course, guys, any of you who are paying attention to the price, you will notice a strong correlation between Google and Facebook. And that's a good thing actually to observe at this point, guys. For certain strategies, correlation is highly favorable. For certain other strategies, and most strategies, correlation is not favorable. So if you're trading similar asset classes, i.e. they're both IPO'd, or they're both on the New York Stock Exchange or the Nasdaq or whatever the case may be, they're both tech, okay, they're both priced in US dollars, okay, there's a lot of underlying factors that they have similar, or that they have in common. As a result, the price tends to move similarly. So it's best to have a diverse portfolio, which in other words might be something like Euro US dollar, and perhaps an asset class like Tesco, which is a retail store in European parts of the world, or certainly across UK and Ireland anyway. Okay, now that we're comfortable with that, guys, what about some other things on the platform? What about some other things? Well, to an extent, folks, okay, we need to know a little bit about the toolbars. So let's just run through that. Let's go back to Euro US dollar. If we want to change, guys, to a different bar chart rather than a candlestick, we simply click on bar charts to the left of candlestick, or we can change it to a line chart, which is to the right of candlesticks. As you already know, guys, we can zoom in, we can zoom out. We can also discuss a little bit of the auto trading, which I'm not going to do just yet, but we can change the time frames, okay? We can change the time frames all the way down. Now we're stuck and we're defaulted to daily charts, but what we're looking at here is the monthly chart of Euro US dollar way back to October 2004. So this gives a much more broad view of Euro US dollar and what the price of the same has been doing. If you go back to weekly charts, guys, again we get a more holistic view. Daily charts, guys, favored by lots of trend traders is what we're looking at now. We can go to H4, which is 4-hour charts, a huge spike there, guys, back on the 3rd of December. I'm sure some of you can remember what that was as a result of. We also have the hourly charts. This would be used again by the intraday traders, perhaps. The 30-minute charts, guys, the 15-minute charts, and the 5-minute charts, and all the way up to the 1-minute charts, to the minute charts, guys. And what's the difference between all of those things? Each candlestick on that chart represents that selected time frame of trading. In other words, M5, each candlestick represents 5 minutes worth of trading in the Euro US dollar market. H1, each candlestick here represents 1 hour of time and the price movement for the same. So it's a nice way to get kind of, if you really appreciate what we're saying there, it's a nice way to get a little bit more analytical and lateral about volatility. Is it as binary as it seems? Is there more than meets the eye? That's why some traders use multi-time frame analysis. Now, within this though, we also have to be able to do certain things with euro US dollar. So what we might be looking for, okay, is to add on certain things to the chart, to overlay it with some instruments. Well, let's do just that. And what I want to explain first of all, guys, is the crosshair. Okay, the crosshair is a very nice tool. For each point you're on with the crosshair, at the bottom, okay, on the x-axis if you will, you have the time and date. On the y-axis you have the price for that point in the crosshair. If you left click and hold, you almost get a sub crosshair. And what that then shows you, okay, it has three figures, guys, if you can see on screen. Currently we're looking at 86, 2904 and 1.17498. What that represents is the difference in those three quantities from this point to where we're now looking. 104 is the amount of candlesticks. In other words, between the original setting in the crosshair and where I'm currently holding it now, there exists 104 candlesticks in between. 4090 is the amount of pips, including the fractional pip also, and 1.183, or the last number, guys, of the three to the right, is the current price of where we're holding the mouse at this point in time. That's not necessarily relative to here, it's on its own and independent. But the first two figures are relative to this point. How many candlesticks is there between this point, and the amount of pips also then, which relates to the vertical. Okay. So that's useful then if you want to measure potential accuracies of your system or profitability from a visual point of view. There's also, guys, vertical lines we can draw to help us analyze. We have horizontal lines as well. We have diagonal lines. We have diagonal lines, as you can see here. I'm going to remove them in a second and do something a little more neat. We also have equidistant channels, okay, which are particularly favored amongst technical analysts, okay, usually. And we have then Fibonacci retracements. We can draw some text if we want to remind ourselves of some things, and we also can then draw some arrows if we see fit, okay. And the way to get rid of all these things is to double left click and then right click, and you can select your options. So double left click and then right click. And what I want to draw on this chart, guys, is a pattern that certainly many technical analysts can see. Okay, certainly many technical analysts can see at this point, and I want to see if you guys can see it. And any of you are following, again, some certain key levels or some key media feeds on the Euro US dollar will be observing this. So I've just right clicked there. I'm going to go to trend properties, and what I'm going to do is I'm going to change it to a black. I'm just going to increase the thickness a bit because it's a bit fickle when it's really thin and red. So I'm going to change it, guys, and make it more impressive, okay. I'm going to do that again, and I'm going to do it for the final third one. Can anybody see what we're getting at here, guys? We haven't just picked these ad lib or ad will. Why are they here? Why are these particular lines here? Well, yeah, absolutely, Mike. Mike is on the money, the first one. Suzanne is correct too. Jessica, you're on the money. Francois, you're on the money too. Amel also is Florian, Armando as well. Fantastic. Yes, this is a descending triangle. What's a descending triangle, guys? And perhaps we're even looking at a no-fly zone here as well. A descending triangle is when the high prices are moving downward and all respect periodically the similar or a common gradient or common slope, as you can see here. But that has to be coupled with a bit of support at the bottom, or some sort of support. So you could say that we've perhaps tenuous support, guys, here around the 1.071 level, more support around the 1.055 level, and even further support that's not so well established, guys, okay, around the 1.046 level. Mostly when these things happen, guys, it tends to breach those levels in phases, okay? And you might label this very correctly here as the no-fly zone, okay? And I know you're aware of that from previous lessons you've been having with my colleague Tom. So, having looked at that now, We might also want to add in some other things. So let's get used to the toolbar again, and let's make our way up to insert. And let's go to indicators. And what we're looking at here now, guys, is a couple of indicators that frankly, the only thing they have in common is they all begin with A. But we then have 5 categories through which we can select and view other indicators. So we might want to look at trending indicators. We might want to look at oscillators. We might want to look at volumes. We want to look at Bill Williams indicators or custom. Let's go to trend and let's put in a moving average. Now let's do a 100-day moving average. It's simple. Let's thicken it up just a little bit and press OK. Let's put in another one, guys. What time frame does anybody think? Does everyone think we should put in here? Any ideas? What might suit in light of this? And maybe we should change the color as well to a blue. Yeah, well now we're looking at a 200-day and 100-day simple moving average, okay? And the crossovers therein can often be indicative, okay, of major movements to come within markets. That's what often is the case. But as you can see, they're very, very long in terms of the maturity of that particular entry, i.e. we're looking at about a year here, which would incur you very high swap costs, okay? But furthermore, there's a high risk attached to the same because as you can see, it's not necessarily very accurate. So if you're trading this system or using moving averages, guys, it's actually more suited to investments, okay? It's not really suited to trading. And what we're showing you how to use here, or what to do, is how to insert the indicators on the chart and I guess customize them as you may or may not see fit. Now, we also have to be able to do certain other things in the platform. We need to be able to access history. So let's just go to Tools and History Center. Okay, and if we go to, let's say, Forex Majors, we might go to, let's say, Aussie dollar versus US dollar and go to daily. Now what we have is the daily history, okay, as you can see here from 2016 all the way back to 2012. So it's the daily history of that chart. And we can then export this. We might want to export this as a HTML file or as an ASCII file or as a CSV file, which is basically the same thing, or another file. We might want to then import that into Excel. And what can we then do? Well, that helps us then backtest. We might want to import it into another software feature or function or mechanism that we have. And that's how backtesting can be done and leveraged from the platform, guys, okay? Now, another thing we also need to be aware of, guys, is in the market watch list, and I want you guys to be very clear on this. This is one of the parts of being a retail trader you have to be comfortable with. And I'm going to bring up my notepad again. So let's just bring up this notepad. What I'm going to do is here, I'm going to just take Euro US dollar, okay? So it's Euro US dollar. I'm going to take, let's say, 1.09, which is basically what it's kind of hovering around, okay? Whoops, 1.0900 to about 1.0902. So 1.0902. Okay, not to be too simplistic about it, guys, but what's the difference between those two things? Yeah, absolutely, okay? It's 2 pips, isn't it? It's 0.0002. That's all the differences between those two figures. Guys, which one of those, that's the bid, okay? And this one here is the ask. The bid is what it's coming in at for the broker, and they're asking for this. And the difference is called the spread, and that's the financial transaction charge you actually have to pay. How do you calculate the spread in monetary terms, guys? And has anybody ever done that before? Anybody here ever done that before, guys? Just have a think about this. How do you calculate the spread? Okay. Okay. Not too many of us are too familiar with that. Well, let's go through it in detail. So, the spread is said to be the difference between the bid and the ask multiplied by the notional trade size. That makes sense to everybody, guys. Okay, so we're back to our lot sizes. So the lot size on the trade we've entered, okay, as you can see here, was 1, which is actually a notional trade size of 100,000. 100,000. And can anybody do that multiplication for me, guys? I'm going to open up my calculator here and we'll do it together. 0.0002 multiplied by 100,000. That gives us $20. Isn't that amazing, guys? So the cost of transaction of this trade was $20. And everybody see that. Now, to be perfectly fair with this, okay, in order for you to actually trade that amount, guys, two cases: you're with a 10k account risking about 50%, or you are using a 100k account risking about 3% to 5%. Okay, so it's very unlikely that unless you're using an exceptionally large account and trading like an absolute lunatic, that you'll be paying spreads this high. Usually, guys, they kind of be between the $2 to, let's say, $4 mark, okay, per trade. That's what you're looking at. So it's very, very cheap. It's very cheap. And swaps, guys, tend to cancel themselves out over time because some of them will be credited to you, some will be debited to you. So there's a bit of a difference, okay? Now, that's what the spread is, guys, and it's important for you to understand why that is. How does this affect you in trading, though? Well, it affects you as follows, guys. When you enter a long order, you actually get in at the ask price rather than the bid, okay? Or the other way around, I should say. You get in at the bid price rather than the ask. So you get in a little bit below where your order is. On short orders, there is no difference, but you get stopped out a little bit earlier, similar with the long order. That's the way the spread works, guys, and it's something you should be aware of as a retail trader. For STP, or straight through processing brokers, the spread tends to be a little bit higher than that of the market maker, as it is their sole way of making revenue from their customers. But as a result, okay, there is no conflict of interest. In other words, that $20, guys, let's say, that applies with this trade, in an STP environment, regardless of the outcome of that trade, that's what the broker makes. The broker, in effect, doesn't matter. Well, really, the broker would like you to win and to be happy with their service, because that means you keep making or keep placing trades with them. Okay, so when you lose, you might go away, and then they don't have the revenue from you anymore. So STP, guys, is the type of relationship you really do want to have with that broker. Now, we can also go, guys, and I'm just going to do this very, very quickly, to the account history tab, which is where we can see, guys, the transactional history in terms of trades placed on our account. And furthermore, then, we can go to the navigator here. There's an expert advisor tab here, and there's also an auto trading tab. Anybody know anything about those two things? Anybody know anything, guys, about those two things? What are they? Yeah, it's basically automated trading, isn't it, folks? So it's almost your PC carrying out that trading for you. Unless you're in a professional environment, okay, it can be exceptionally tough to get something that works. Why is it? Okay, retail brokerages, compared to those professional environments, have a very slow processing speed for automated trading, or in particular high frequency trading. Okay, so it's not quick enough, to be perfectly honest, and your own internet connection inevitably won't be quick enough. Furthermore, a lot of variables like your own bandwidth, the bandwidth that the broker has with its liquidity provider, the liquidity provider's speed of execution, okay, all those things, and there's more as well, are very different from person to person, from home to home, from broker to broker. So a lot of those online solutions that are sold and distributed on the net are actually completely incorrect, okay? Or sorry, are completely correct, I should say, but may have very different results to what you've seen or what you've been told by the provider because of the above varying factors. Does that make sense to everybody, guys? It's kind of like saying this. It's basically like a person in Singapore and a person in Iceland buying the exact same type of clothes for 1 year. It's absolutely nuts and doesn't make sense. The factors, the weather, the environment is completely different. Very similar analogy here. So that's something I would like you all to be aware of when it comes to making those decisions. Okay, and furthermore, I just want to do one last thing here, guys, and I want to right click and I want to go to specification on the market watch list. Okay, and what that gives me then, guys, is the contract specification, including the sessions of times available when I can trade the particular asset class I've right clicked on. In other words, let's go to specification on gold. Okay, the spread is floating, but that basically means it's not fixed. The margin currency is in US dollar. Let me just see here, let me go down a little bit more, guys. Execution is straight to market, as you can see here. The swap type is in percentage terms. You can see what the swap price is, guys. That's always done by standard contract size, and you can see the quotes and the trading hours of gold furthermore. And the 3-day swap occurs on Wednesday. Okay. Last point then is the contract size is 100 ounces. So standard contract size is 100 ounces, guys. Okay. Well, that's absolutely fantastic, and I think that's been a great introduction into our demo trading platform. Now, something that you guys need to know is the following, okay? And here's the home truths. When you are demo trading, you act differently. I'm going to repeat that. When you are demo trading, and let this penetrate each and every one of you, this sentence. When you are demo trading, guys, you will act differently. Take my word for this. It's happened to me. Like poker guys playing with matchsticks, okay, versus playing for real. There is that tendency to throw all your matchsticks in, okay? So in other words, psychologically, even though mathematically you might have the understanding, okay, psychologically another huge aspect comes in. So you need to have that self-awareness. The executions, guys, frankly, are not real, okay? So the platform acts differently, as do you, okay? Now, a good way to mitigate bad executions, to mitigate, I should say, bad executions or low execution speed, which can be common, is to use longer term trading techniques. That's what we have developed, which I hope you will be excited to see Tom discussing with you through lessons 8 through 10. Okay. Longer term techniques mitigate these factors and allow the retail trader to profit. The retail trader, guys, is our market. The retail trader is our customer. You guys are the ones that this company was established for. The most important consideration, however, by far, is that there's no point in trying to figure it out for yourself without utilizing tried and tested strategies and methodologies that work rather than finding out the hard way and never really knowing. And that can be a problem as well, folks, okay? Executions are not real. Spreads can widen. Slippage can also occur. Spreads widening, guys, often means that when you're trying to get in at a certain price, okay, usually around a big event, what will often happen is the spread widens because of the supply and demand mechanics for the market, and you can't get in at the desired price. Furthermore, though, you can get slippage, which effectively is not getting in or usually out at the right price, okay? And as we were saying, guys, it requires all those strategies and methodologies. Now, this is the last slide, and a lot of people ask me about using practice platforms to backtest trading strategies to see if they worked in the past. That's fine, guys, we do that, and we also forward test as well to test strategies in real time. But again, you can run the danger of making mistakes, okay? Making strategies actually fit the past, which is a very simplistic and common mistake. Well, that's really because, in my opinion, it's not based on solid theoretical underpinnings, okay? So in backtesting and training, you need to be very, very honest with yourself, okay? Very honest with yourself. Honest and impartial in your analysis. Every trader I've made, guys, has inevitably had one thing in common. One thing in common. Okay, well, two things. Discipline and an ability to self-search and take honest stock of themselves. Within that, we also need to have a structured testing plan. In other words, we don't have any disorganization, to be honest. We want to use initially practice accounts and keep a log of our entries, our exits, and why we had those entries and exits. If you do not know why you have a particular entry or exit on a particular chart, you need to completely reassess exactly what you're doing, as you're likely to lose all your money if you do not have a more structured plan. That is a very, very, very true statement. I urge all of you to heed. Okay, it's an ominous warning. Please heed the same. If you do not know why you've entered a position, guys, okay, you might as well go online and buy something worth $1,000, and when asked by your spouse or whomever or a family member why you did that, tell them you've absolutely no idea. It's utterly insane. In trading, guys, the context is different, but the level of insanity is completely similar. Okay. There needs to be a full risk management strategy employed, which complements usually the overall entry and exit system. And when methods are fully tested, move to small positions. Remember to be very, very honest as well. Okay. Become a machine, guys. Effectively, that kind of means be Arnold Schwarzenegger in Terminator. Okay. Limit discretion. You have a mission. You have something you need to achieve. Emotional fret or worry and all those things just come in the way of that, guys. Practice, practice, practice. Remember what they say, guys. How does one get to Carnegie Hall? Through practice, practice, and practice. Okay. I'm going to briefly talk about Community FT, guys. We'd like you to join a global community of like-minded people, and you will also be getting a link to this in your chat box, okay, now by all the support team. Get posting, guys, and become part of this amazing community. Learn from traders of all levels, and remember that learning is enhanced in communal environments, and yes, this is our own forum specifically set up for you. So, without any further delay, at this point, let us break up, guys, and take a little bit of time before a Q&A session. So I'll be back in approximately 2 minutes, and in the meantime, guys, maybe get a refreshment, and we'll catch you very shortly. Catch you soon, guys, and we'll chat then. Okay, everybody, and we are back in action. Thank you for pausing. Let's get to some of those questions. So I'm just going to see here. Chris says, Chris C, good to see you here, Chris. Hope you enjoyed the presentation. Chris says, can you give an example of what is the recommended competitive spread that we should be paying with our brokerage? Yeah, it's a very fair question, Chris. Okay, it's like, what's the best price to pay for insurance and shopping around? Usually, guys, okay, the spreads are variable and they depend on live conditions, okay? So what you should have from your brokerage is a way to get the average spread, okay, or get the standard spread. For major Forex pairs, guys, you can then compare and contrast, okay, and similarly you can do the same with other asset classes. I'm not going to give specific figures, okay, but what I will say is this, okay, smaller spreads usually lead, okay, to the broker being a market maker. Okay, I got an email today, guys, about a broker who made amazing revenues, record revenues in the first quarter of last year, okay, 2015. Sorry, in the entire 4 quarters of last year. So last year, record revenues, okay, but they offer some of the best spreads in the industry, okay. How can they make those revenues offering the lowest spreads? Very simple, the market making. Okay, so you have to understand really the entire business model and the way the network works. So sometimes, guys, a better spread ultimately means your funds are safer over time. So I hope that helps, Chris, but great question. Anelia, I hope I'm pronouncing your name okay, Anelia. Anelia says, what's the recommended level of leverage? Anelia, approximately 1 to 50, I guess. It really depends on where you are in the jurisdiction you're in, but for US or for you guys in the US, guys, it's about 1 to 50 is the maximum you can have, which certainly will help you leverage your margin. So in many ways, it's plenty. It's more than enough. Let me just see here, guys. How do I download MetaTrader 4? Yes, guys, you need to go to Google and enter MT4 Broker or MetaTrader 4 Brokerage USA or whatever it is, guys, something that Google will easily spew out a result for, okay? Let me just see here. Janice says, Isan, thanks for the lesson. Janice, thank you. Good to see you here. Janice says, what will we be discussing in the remaining classes? Janice, well, basically there'll be a lot of material covered by Tom, okay, and Tom is preparing all that as we are speaking. But there will be a little bit of a bonus announcement, okay, and they are frankly the most important and, to be honest, guys, I believe interesting and enjoyable lessons. We will be talking about our own specifically designed counter retail trading techniques, okay, so that's a bit of a spoiler, okay, so certainly do show up for those. Let me see here also. Caroline says, Isan, how many markets on average should we be trading? Caroline, that's something I can't really answer without more of a pretext to that conversation. So if we can suspend that answer until another point, guys, we will indeed do the same. Let me just see here. Let me see here, guys. John, I got to that one. Another answer. Tom asked a good question. Tom H. So Tom says, okay, how many trains on average should you be in per week, per day, per month, per year, etc., etc.? Completely depends on your strategy, depends on the risk-reward ratio, depends on the hour, or depends on the time frame you're trading, and it depends upon your risk management and profit cushion levels that might filter your trades also, Tom. So that's, again, it's not a question that there's any one particular answer for, but I will tell you, on average for us, okay, we'd have about 1 to 1.5 orders trigger per day, okay? And with the right win-reward ratio, that is absolutely ample. It's absolutely ample. Will this lesson be recorded? Yes, and this will be placed in your members login, guys, within 24 hours, or if not, beforehand, most likely. So, I believe that is it for now. If you have any further questions, guys, please do get in touch with us. via your trader support manager or get in touch with the guys at support@academyft.com. It has been my pleasure. My name is Isan Penny, and as well, it will be that many years after this webinar has finished. So it was good to be here with you all. Hopefully, guys, you got a lot of information from that session, and I look forward to seeing you all then hopefully shortly. So stay tuned, guys. Again, lessons 8 through 10 are the most interesting, important and relevant from your perspective, and they are always certainly full of welcome surprises. So guys, have a fantastic day or evening depending on where you are in the time zone, guys. Look forward to seeing you shortly. As we say here, keep learning. Thanks a mil, guys. Catch you soon.
Now, I'm not saying I don't like kids. I like kids. I have fun hanging out with my friends' kids and joking around with them, whatever. They're great. But I do feel like when I talk to my friends that recently had kids, it does seem like they had to give up everything for the kid. And that's very scary. If you want to have a depressing conversation, talk to a couple that just had a kid. Ask them about the last night they went out for themselves. They will describe the most boring, typical, mundane evening out.